Good afternoon, everyone. This is Anthony Alaka with Torrey Hills Capital, and welcome to the Arizona Sonoran Copper webcast for March 25th, 2024. Hope everyone's doing well, and thanks for taking the time to join our virtual lunch. Arizona Sonoran Copper is a well-funded copper exploration company focused on its principal asset, the Cactus Mine. The Cactus Mine is located just south of Phoenix, Arizona, an excellent jurisdiction surrounded by in-place infrastructure. The company recently announced the results of its pre-feasibility study, which showed very robust economics and work to further de-risk the project. The company trades on the OTC under the ticker ASCUF and on the TSX under the ticker ASCU, and is currently trading with a market cap of roughly only about 110 million US. With the recently announced positive PFS, strong balance sheet, positive outlook for copper that we were just discussing, we feel there is plenty of upside potential in the stock as the company continues to de-risk its principal project. With us today to discuss Arizona Sonoran Copper's operations and growth strategy going forward is the company's president and CEO, George Ogilvie, and we also have the company's director of investor relations, Allison Dwoskin, with us as well. It's great to have you both on today, and thanks for taking the time to bring our viewers up to speed on the company. Obviously, a lot of exciting developments are happening, and I'm excited to have you share those with our group. But before we get started and I turn it over to George, I just want to mention that if our viewers have any questions, you all know the format. Simply type your question into the Q&A or chat box, and we'll make sure that it gets answered. So with that said, I'm now going to turn it over to George Ogilvie. George, the floor is yours.
Hey, thank you, Anthony. Greatly appreciate the opportunity. So it's Arizona Sonoran, and we're developing the next copper mine in the US for the US energy transition. Thank you, Allison. We do make some forward-looking statements, so draw your attention to the cautionary language. Look, I think from a macro perspective, as far as copper's concerned, I think we're all aware that on an annual basis, there's about 31 million tons of refined copper required on an annual basis. Obviously, as we move towards decarbonization, the drive for green energy, copper is going to play a much, much bigger role. And you can see here that last year, WoodMac was actually forecasting that by the end of this decade, we should be approaching somewhere around 40 million tons of refined copper will actually be required. Most of the issues are actually going to be seen, and we're seeing those today on the supply side. I'm sure you're all very well aware of what's happening in Panama with First Quantum, Cobre Panama operation. Anglo American announced, in their 3-year forecast, 250,000 tons of copper was coming off their forecast. And we've seen in the last several weeks as well, some other mines have reduced their copper forecast for the next 3 years. So it's no surprise that on the supply side, we don't believe that they're going to be able to meet up with the demand. And the other thing that we're seeing is that there has been a lack of investment in copper mines really over the last 10 years. Mines are not being found to the same degree that they were in the early 2000s and 2010s. The existing mines, the grades are diminishing. And of course, at the end of the day, that's all going to feed into a lack of supply. When we look specifically at the Cactus project, as Anthony said, it's in Arizona at the intersection of 3 major copper porphyry systems. Today, we have 7.5 billion pounds of contained copper in the ground with an average grade of around 0.6%. But if you focus in just on the underground assets, the grade is very close to 1% total soluble copper. This slide shows currently the top 10 development assets in the US today. You can see on the left-hand side in the table that most of these development assets are controlled by either intermediaries or some of the senior copper producers in the sector. And of course, Arizona Sonoran is delighted that we have the Cactus project. I'm sure you're all very well aware that immediately southwest of us, Ivanhoe Electric has the Santa Cruz deposit, which essentially is the down plunge extension of the same mineralized system that we intend to mine higher up in the system. And today they have a reported 10 billion pounds of copper in the ground. Thank you, Alison. The PFS that we put out, which we'll touch on shortly, showed 55,000 short tons of cathode production a year over a 21-year mine life. That would equate to about 50,000 metric tons. And the all-in sustaining cost is $2.34 a pound of copper, which, as you can see in the top right-hand side of this slide, where we have the top 10 producers in the US today, we would fit in there at number 7 on this current production scale. On a total recoverable copper, we're looking at recoveries around 80%. And on a T-sol basis, those would be anywhere between the sort of low 80s up to 91%, with the oxide materials still very much in line with what we see with other producers in the US today. And then on the left-hand side, you can see the bulk of the copper mines are located in Arizona, and most of those are held today with some of the senior producers, in particular Freeport-McMoRan and Rio Tinto. Thank you, Alison. So this is a brownfield site. The mine was formerly owned by ASARCO in the late 1960s. It went into commercial production in the early 70s, closed in 1984 when the mine was uneconomical. At that time, copper would have been 65 cents a pound of copper. Today, copper is sitting at $4 a pound. So because it's a brownfield site, we benefit from world-class infrastructure. Arizona is a tier 1 jurisdiction. Arizona produces over 70% of the US domestic supply of copper. And the PFS that we put out had maiden reserves of 3 billion pounds in the probable category. The economics of the PFS we'll touch on. They're robust, 55 years with 21-year mine life. The NPV 8 after tax was 509 million US dollars. That's about 700 million Canadian dollars on a company today with a market cap of approximately 170 million Canadian dollars. Life of mine revenue, 9 billion US, and free cash flow after tax, 2.5 billion. You'll see the capital intensity is very low in the first quartile. You've also got a very experienced management team here with a track record of delivering exceptional results for shareholders in prior companies. Very, very important, but all of our land package is on private land. There's no federal nexus. We only deal with the local municipality and the state regulators. And there are assets within the current portfolio that are fully permitted today. And the city of Casa Grande, which is only 5 kilometers to the southeast, population of 55,000 people, gives us a very, very strong social license to see this mine come back into production. A little bit on the share capital structure. So only 109 million shares issued. The company has no debt. We're sitting today with approximately 15 million US dollars cash in the bank. We're about to submit a second quarter invoice to Rio Tinto with their Newton division for approximately 5 million US dollars, which will bolster the treasury to somewhere around 17 to 18 million US when we enter the second quarter after we run our next accounts payable. You'll see that Rio Tinto is a 7% shareholder. They have preemptive rights. They're allowed to follow their money. There's no board seat, however, and they're not allowed to go above 9.9%. And since joining the company in July of 2021, I've invested just under 3 million Canadian dollars of my own money at a weighted average price of $2.48 Canadian. Today, we're trading around $1.40 Canadian. And you'll see that we have significant bank coverage. The average, I believe, as of last week, and the next 12-month return was sitting around $3.20 Canadian, which essentially is a doubling of the share price today.
George, quick question that just came in. The money from Newton, is that earmarked for something specific, or do you get that based on milestones? How does that work?
The money is earmarked for advancing the Newton programs, which at the mine site is the drilling of the primary sulfides to move it up into an indicated resource. None of the business plans that we've shared with the market at the moment include Newton. So essentially, we've got about 1.6 billion pounds of copper and our 7.5 billion pounds of global resource of primary sulfides, which is not currently in the plan. For the signing of the Newton agreement, we did get $10 million, which we can use any way we want. And there's a management fee associated with the other monies that we draw, given that we're actually managing the program, so we can deploy those again any way we want.
Great, thank you.
Thanks, Alison. So you've got a management team here with over 170 years of experience. You can see we've got a very strong team based out of the Tempe office and Casa Grande itself. Last year, we added Bernie Lawyer to the project team as Senior VP Projects. Bernie's almost a 40-year veteran, spent many years with BHP at Escondida. He was instrumental in bringing some of Torex's gold mines in Mexico into production, and he joined us from Sol Gold with the Casabel project in Ecuador, which we believe that they won't actually build. So we're absolutely delighted that we attracted somebody of Bernie's experience. He's a native Arizonian and lives and resides right in Casa Grande next to the project. So invaluable experience for these technical studies that we're in, and eventually moving through EPCM and handing this over to the operations. My experience as a mining engineer, 34 years of experience now. Prior to joining this company, I was with Battle North Gold, which ultimately got sold to Evolution Mining with the Phoenix mine in the Red Lake camp. Prior to that, my team and I turned around Kirkland Lake Gold, and ultimately it eventually was sold to Agnico Eagle for $10 billion. Thank you, Alison. So the base case PFS was ran using a long-term consensus copper price of $3.90 a pound. If we look at what the metrics look like at $4.25, you can see post-tax we're approaching $800 million, which would be about $1 billion Canadian, and the after-tax IRR is getting close to 20%. And as well as the all-in sustaining cost, you can see the C1 cash cost there of $1.84. The initial capital, including a $75 million contingency, is $515 million. So on a capital intensity per tonne of cathode produced, we're sitting at just over $10,000 a tonne. Thank you, Alison. We did state earlier that the copper price today was $4 a pound. At those type of prices, you can see over $800 million on a post-tax basis, close to $600 million. The IRR after tax is at 17%, 6.5-year payback, and you'll notice, as Alison's highlighted, about $2.5 billion in free cash flow on a post-tax basis. Now, this PFS that we put out is not the final product. The management has no intention of looking to finance the project on the back of the PFS. There are further studies that we've embarked upon, and we believe over the course of the next 3 to 9 months, as further technical studies come out, we will improve upon these economics. Our goal would be to put ourselves in a position in 2025 to deliver a definitive feasibility study, which is ultimately what we would then look to do the project financing on to move the project forward into EPCM. Thank you, Alison.
And George, how much do you expect those numbers to change?
We expect the numbers as far as the upfront capital to stay the same. We're looking at, with our next iteration of the plan, to bring in a new deposit called Mainspring, which is not currently in the PFS. It would be an open pit, and it would push out some of the initial capital and sustaining capital, which we see in this PFS, to go into Park Salyer. So, the capex is likely to stay the same. The execution risk improves because open pit mining is much easier than immediately going underground. And we should see eventually an increased production profile and a further extension of the mine life, which obviously is important as well.
Yeah, that's just one of the questions that came in, is that do you think you can improve on the 21-year mine life, and like what are the opportunities for expansion?
Well, it's a great question. And if Alison just jumps to the resource slide, I can show this. We've got 4.4 billion pounds of copper in measured and indicated category. And that's what we use in the pre-feasibility study. We can only work with M&I. But you'll notice below there's 1.3 billion pounds of copper in the inferred category at almost the same grade, 0.61 total soluble copper. So if you did a conservative 50% conversion of that eventually into the mine plan, it's going to give you access to another 500 to 600 million pounds of copper. And at 100 to 120 million pounds of annual production, you're looking at another 5 to 6 years of mine life on top of what we're showing in the PFS. And that's with no exploration success. That only includes infill drilling. If you then add in what we believe is going to be a sizable increase in resources with Mainspring, and you assume that the Newton technology continues to prove successful, at the end of the day, you're probably at these production levels easily looking at a 35 to plus 40-year mine life here in a tier 1 jurisdiction. And of course, as I alluded to earlier, there is a regional roll-up play here where maybe you roll up Ivanhoe Electric Santa Cruz with this deposit. Then you're looking at something easily north of 50 years on private land with access to water and a very strong social license. In my opinion, that's a world-class asset, by anybody's reckoning.
Absolutely.
Thanks, Alison. So we spoke about the resources, and then we touched on the reserves earlier.
George, I'm just going to go back to the operations.
Okay.
Here.
So here you can see the production profile that came out of the PFS. The solid area at the back is the actual recovered tons of cathode. And you'll notice in the mine's latter years, from year 10, we start to get up on average around 70,000 tons or 140 million pounds of copper. That's because at that time we're mining both the underground assets, which are Park Salyer and Cactus East. You'll notice in the mine's first 10 years, however, from year -1, our focus is predominantly on the historical surface stockpile, which was a remnant from the Asarco days, and the Cactus West open pit. Now, we did not optimize the PFS for maximum NPV and IRR. Had we done that, we would have gone after the underground assets first. But what we tried to do was, from an execution risk perspective, we felt that mining the historical Cactus West open pit and the rehandling exercise of the surface stockpile was probably the easier to execute on, particularly given that we're a single asset company with no other producing assets. So I think that is a very, very important distinction here, that we ended up with what we think are good numbers from the PFS, but we didn't optimize it because we were very focused in on the execution risk on the project.
Speaking of being a single asset, one of the questions that came in is, are you looking at other opportunities, or is the focus Cactus right now?
We've been presented with other opportunities over the last couple of years, and we've discussed it internally, and anytime we've also raised it with the board, the message from the board has always been, no, let's remain focused on our core asset at this juncture in time. And look, anybody who's followed this company over the last 3 years will realize that the project continues to grow and is now of a size and scale that would be very interesting for intermediates and probably in the next couple of years, seniors, as we continue to grow the reserve and resource and the production profile. So I think the old adage of a bird in the hand is better than two in the bush is very much our strategy at the moment, that we will remain focused on cactus.
I agree. Thank you.
Here you can see the revenues that are generated, and of course, $9 billion in revenue over 21 years, and about $2.5 billion of free cash flow. You know, a lot of it coming obviously from year 7 and beyond when we get into both the underground assets with the superior grade. Thank you, Alison. So here we touch on the reserves. As you can see, because most of the M&I was in the indicated category, when we convert that over to reserves, most of it is in the probable category. We do have monies in this year's budget to do further infill drilling on the indicated resource to move it up into the measured, such that when we do our next updated mineral resource estimate, we can move some of that material into the proven reserve category, particularly in the first 5 to 6 years of the project, depending on the sequencing of the schedule of the assets. That's obviously when you're looking at project financing and in particular debt financing. So you want to ensure that your reserves in the first 5 to 6 years are predominantly in the proven category. And as I touched on earlier, if you look at Cactus East and Park Salyer, these are reserve grades that also build in dilution. You can see the grades are between 0.82 and 0.88 total soluble copper, given this is a heap leach operation producing copper cathode. Thank you, Alison.
So one of the questions is it too early to talk about how the project will be financed? Or are you going to wait for the results of the technical studies?
It's a little too early at this juncture. We've been approached by project financiers, and up until this juncture in time, we have not signed NDAs or brought them into the data room. However, now that we have a base case plan built from maiden reserves, it is our intention to bring a few very select groups into the data room. And then as we advance the further technical studies over the next sort of 9 to 18 months, those groups would actually continue to do their due diligence and follow us through the process. And then that way we're getting feedback from them and the independent engineer to try and ensure that, you know, we can fully de-risk this project.
Great. And another question that just came in said, I think this property has shown past traces of low-grade gold, silver. Any opportunities for meaningful byproduct credits or not meaningful?
Well, it's a great question, and the person who asked that question is quite right. There's also molybdenum or moly in the system. When ASARCO was in production here in the 70s and 80s, they put in a concentrator and they were recovering gold and silver in the copper con, which then got railed out to their El Paso, Texas smelter. Unfortunately, when the mine eventually closed and the Department of State Lands started remediating the site, the old flotation mill was torn down and actually sold off. So at the moment, with a heap leach operation, we have no ability to recover the gold, silver, or moly from a leaching operation. If, however, the Newton technology proves unsuccessful or Rio doesn't exercise their option to JV, once the mine is in production and we are leaching the oxides and the secondary sulfides, if the copper price improves, you know, from the $4 a pound we see today, I would suspect in the next 20 plus years, there will be an ability to look at putting back in a flotation circuit and then going back and recovering some of the gold, silver, and moly. But none of that is built into any of today's plans.
Great, thank you.
So you can see when we acquired this project out of a state trust in late 2019, we only had 224 million pounds of resource, which was contained in that surface stockpile of approximately 100 million tons of mineralized material. As we drilled around the historical open pit at Cactus West and then the underground asset next to it, Cactus East, that increased to 3.5 billion pounds. We then discovered Park Salier 2 kilometers to the southeast or southwest, started drilling that out and eventually bumped it up to about 6.5 billion pounds. And then we put out a resource update last year, which was principally to move material into the measured and indicated category ahead of that PFS. And that's why today we now have 7.5 billion pounds of contained copper in the ground, with more than 50% of it in measured and indicated. We strongly believe over the next couple of years, as we continue to explore here, the resource is going to grow probably to in excess of 10 billion pounds of copper in the ground. And we're currently finding a pound of copper in the ground with a discovery cost of under 1 cent a pound of copper. So obviously that's telling us, with that type of discovery cost success, that we should continue to explore on this property. And you probably see that in the next 3 to 4 months when we come out with a mainspring resource included in these numbers, and then a preliminary economic assessment with mainspring built in. We think there's every opportunity on that one that the resource could go beyond 8.5 to 9 billion pounds of copper in the next 6 months. Thank you, Alison. So here we touched on this earlier, but we've been conducting metallurgical testing to pre-feasibility study and now definitive feasibility study for the last 2.5 years. These recoveries are based against the total soluble grades, and that's why they're in the low 80s to the 91%. If we to look at these versus total copper, we'd be looking somewhere in and around 80% recovery. Thank you, Alison. So we touched on capital intensity previously, with 515 million dollars of upfront capital required and 50,000 metric tons of cathode being produced on an annual basis. It gives us a number just over $10,000 a ton. And you can see when we compare ourselves to some of our peers, this puts us in the lowest quartile when it comes to actually building this project. We believe this is a good number because it's also associated with risk. And what I mean by that is we see a lot of projects being built and there's an overshoot on the actual cost that it takes to build the mine. I'm not saying in any way, shape or form that that will happen on this one. But for example, if you're building a $500 million mine and you have a 20% overshoot, you're looking for $100 million to fill the hole. If you're building a $4 billion project and you have a 20% overshoot, you're suddenly now looking for $800 million US, which is a much, much bigger hole to fill. So we believe the lower the capital intensity, the lower the risk when it comes to executing and putting it into construction. Thank you, Alison. So here you can see on an enterprise value today, we're valued at around 95 million US dollars. In the PEA that we put out in 2021, the maximum production we were looking at was around 40,000 short tons or 80 million pounds of copper cathode on an annual basis with an 18-year mine life. We've already shown that the average here is 110 million pounds of cathode. And then the latter years from 10 out to 20, we're touching on 70,000 tons or 140 million pounds. If you look at two companies, Taseko and Italia Mining, and obviously Taseko is just down the road from us with the Florence project, which they're currently building, which is about 40 miles to the northeast. You can see that company has an enterprise value of 687 million US dollars. and the production fits right in line with our base case PFS. And of course, as Alison highlighted earlier, Hudbay, down in the Tucson area, and then Capstone Mining obviously did fantastically well the last couple of years. Their Pinto Valley operation is about 80 miles to the northeast of us, and interestingly doing about 60,000 tons of cathode a year, which is very much in line with our own base case.
Once you announced that PFS, did you see a lot of interest? Were you contacted by some other companies to discuss, what, the results? I mean, I think there were a lot of people probably impressed with what you announced.
Yeah, well, look, I'll be very open and honest. It was a bit of a mixed reaction. And the reason for that was that when the PEA was done 3 years ago, they were taking run of mine ore from the open pit and underground, putting it in big heavy trucks, and then driving those trucks up onto the leach pad, depositing it down, and then expecting to irrigate it and draw off the pregnant leach solution. The issue with that was that there was never any primary or secondary crushing in the surface stockpile. We have fines. The type of ore we have will generate some fines. So we've got to do a process known as agglomeration, where we make the fines larger so we can extract optimum recoveries. And you don't want to drive big heavy trucks up on top of the leach pad, which causes a lot of compaction. The top 10 feet becomes like a cement block. You've got no hope of irrigating that unless you go back and rip it. Like a farmer plowing a field of potatoes, but you're not going down 6 inches. You've got to plow it down at least 10 to 12 feet. And from an operations perspective, it's a nightmare. So when we came up, so the PEA CapEx was only $124 million. And I think the $500 odd million that we put out in the PFS took the market by surprise. So our share price was $1.43. There was an initial sell-off where it went as low as 95 cents. And then about a week to 2 weeks after the announcement in mid-February, the share price recovered and is now back to $1.40 as the market has actually digested the results. And one of the unintentional sort of consequences of the PFS was that we are getting quite a few inbound calls now from several corporates looking for updates on the project, because there can't be many 55,000 short ton cathode producers in the world today that are on private land with access to water, great infrastructure, strong social license, and effectively can be in production in the next 3 years once the project is de-risked and financed. So yes, there's a lot of interest coming in now on this project with corporate development teams looking for updates from myself and my senior team.
Great, thank you.
So we believe that today we trade around 0.2 times price to NAV, which is below the median and the average for our peer group, which sits around 0.45, 0.47 times. And you can also see that from the latest study, we believe we can be in first production in 2027, which is, far and above ahead quite a few of our peers or competitors here actually on the page. So in a nutshell, we think this is a great entry point for somebody who is long copper and believes in the long-term fundamentals for copper over the next several decades.
Yeah, and actually has an opportunity to own it alongside management who is, George, you've clearly put your money where your mouth is, and you've taken a personal position in the stock at prices, higher than where the stock is trading today. So it's an opportunity for shareholders to own it alongside management who have shown that they believe in the long-term merits of the company.
That's a good point, Anthony. We've actually had some insider buying in the last week or week and a half. George has purchased some more shares, and a couple of our directors have bought some more shares. So we've bought about $200,000 worth of shares in the last couple of weeks.
Yeah, that's fantastic, and I think it definitely shows your commitment and to the project and to the company. I think that's great.
Yeah. And look, the other point there is when we did the deal with Newton late last year, which we call an option to JV, and we'll touch on this later. I mean, we got access to 33 million US dollars from one of the largest natural resource companies on the planet that was non-equity and non-dilutive. So, you have to believe that Rio and their Newton division are confident that their Newton technology is going to work on the primary sulfides here. Otherwise, they wouldn't have given us 33 million US dollars.
Yeah, absolutely.
And we touched on this slide earlier. This is where we talk about the inferred resource adding to the life of mine, and that could potentially take us up to a 25 to 26-year mine life today with no exploration success. Thanks, Alison.
One of
And
the
then
questions that just came in, it talks about your cash runway. Do you have to raise any money anytime soon?
we're good for the next 6 months. I would say by the end of this year, we probably will have to look at raising additional monies to take us, through to definitive feasibility study. But as I said earlier, with 15 million US dollars cash in the bank, we've got the ability to draw an additional 15 million US dollars from Newton. Obviously, a lot of that goes towards the work programs to advance the primary sulfides, although we do get a management fee on top of that. So we're in a great position at this juncture in time that we don't have to come and suffer dilution for our existing shareholders at what we believe are very, very low levels for the share price.
Yeah, and I think it's toward the end of the latter part of this year. We should be in a lot better shape. One of the questions that just came in, how are you thinking about sales, strategic investment, offtake partners, leading up to production and financing decisions? Is your data room active?
Our data room was active in the past. We have one group currently in there at the moment that is related to potentially a strategic investment. But there's no other participants in the data room. And as I alluded to earlier, we have been approached by project financiers, including, people who could assist with offtake. But there's no desire at this juncture in time to bring them into the data room. We're principally talking more to, the few commercial banks that still actually lend in the commodities and the materials space.
Great, thank you.
So as far as our go it alone plan is concerned, you can see we issued the PFS. We're currently working on an updated PFS that would come out towards the end of the year, which would include this mainspring property that I'll touch on shortly. Assuming those economics are robust enough, we then move into a definitive feasibility study. And sometime by the summer of next year, we would expect to have that out into the public domain. We are working on, however, a preliminary economic assessment that will bring mainspring in because it's now been drilled out to an inferred resource. And on top of that, we will then layer in the Newton technology, which is the first time the market will actually get a look at how accretive Newton and access to the primary sulfides could be over and above the base case project. And we anticipate that that'll come to the market probably early in the third quarter of this year. And then from that, we then proceed into a Newton integrated PFS. And that then gets judged against whatever PFS we have by the end of October.
That's great. A lot of re-rating opportunities for sure.
Exactly.
That's fantastic.
Thank you, Alison. So here you can see at a high level, direct comparison with some of our immediate peers. Obviously, the obvious one is Ivanhoe Electric with Santa Cruz and Tintic in Utah. You'll notice that the measured and indicated resources stack up quite well against one another. And as I alluded to, I think you're going to see our resource probably increase to 8.5 to 9 billion pounds, with the inclusion of Mainspring here in the next 3 months. The mine lives are very similar. Obviously, our C1 cash costs at $1.84 are higher, lower capital intensity, however, and obviously our report, is the most recent. So, it obviously has all of the inflationary pressures built in that we've seen, coming out of post-COVID in 2022. So where are we located? Well, we're about 45, 50 miles south of the Phoenix airport. You'll notice Interstate 10 connects Phoenix to Tucson. It's only 10 miles to the northeast from the project. We've got the Maricopa-Casa Grande Highway immediately on our southern border. And we also have the Union Southern Pacific rail line there. Remember, ASARCO was shipping out concentrate. The rail spur coming over the road is no longer there, but the rail line into the property is in excellent condition. Of course, the Union Pacific rail line is constantly moving cars on that track. It's not shown on here, but there is a nuclear reactor in Arizona, Palo Verde, which is about 100 miles west of Phoenix. One of the main transmission lines from that power reactor runs right through the property, a 69 kVA line with more than enough excess power on it. And of course, if we draw power from there, we can draw 100% green energy. So the fact that eventually we can bring in all of our supplies and ship out our cathode with rail will make this a very low carbon emitter from a greenhouse gas emissions perspective. The city of Casa Grande, 55,000 people. Pinal County is one of the fastest growing counties in the US. The mayor and city council are very industry focused, and you can see some, world-class, companies there with coal at Frito-Lay, Abbott Lads. We even have Lucid Motors and Nikola Trucks right in town. And just south of Phoenix, Intel is building a big computer chip plant. What that is going to mean that there's a company called Satco who's actually building a sulfur burner right in Casa Grande. They're planning to bring in sulfur from the Gulf, the West Coast, and bring that right in to Casa Grande, produce sulfuric acid, principally for the Intel chip plant. But of course, we can use that as well for our leaching of our oxide ores and producing the pregnant leach solution. Thank you, Alison. So
I'm sorry, could you go back to that map one more time? First of all, that's so impressive. You have rail, you have car, you have everything you guys need in order to be successful. Can you talk about just the surrounding area around, literally right around the project? What is that currently?
Well, you can see on to the southeast, the community of Casa Grande, but that whole area that's in the orange box and around that area, that is all industrial land. And a lot of it is actually desert. I mean, it's Arizona's Sonoran, and it's part of the Sonoran Desert. Obviously, to the west, where you see the green areas, that is farming in and around the area. One of the big drivers in Arizona, so a lot of people will know, is cotton. So there is some farming activity, but immediately around the mine site, it's all industrial and it's all desert.
Okay, great. Thank you.
Thank you, Alison. So look, as well as being on private land, when we acquired the project 3.5 years ago, it comes with water rights to the year 2070, which is another 46 years of the right to take water. And there's also an abundance of water literally in the ground below our feet, 2,000 to 2,500 feet below surface, in a natural aquifer that is only permitted for industrial use. It naturally contains certain elements like selenium, chromium, and zinc, meaning it is not potable water. So farmers and ranchers do not have the ability to tap into that water without, first of all, treating it given they don't want it to go into livestock or for farming purposes. So we're in a very fortunate and unique situation that we have water rights and an abundance of water in the ground, literally below our feet. And there are active wells on site today that date back 4 decades ago that were actually used by ASARCO when they were running the old flotation mill. And we have pumps and piezometers in those wells that measure the volume and the flow rate of water. So we know through real factual data that there's more than enough water in the ground for all of our current business needs. Thank you, Alison. So a bit of an optimization opportunity here, and I'm going to spend time on Mainspring. Last year, about 15 months ago, Ivanhoe Electric had an option on this property from a private landowner. They drilled about 22 holes, and ultimately they decided to drop the option. We picked it up, and last November we started drilling there. In December of last year, we put out 11 holes to the market, and then just in the last week, we put out an additional 16 holes, although in totality, we've now drilled over 50 holes into the deposit, plus we've got the 22 holes that Ivanhoe Electric drilled, given we reciprocated a handover of information. So we're beginning to get a really good handle on Mainspring, and the furthest south that we've drilled from the Park Salia boundary was 750 meters south, and we picked up mineralization within 42 meters or 150 feet of surface. Now, Park Salia in this PFS is an underground sub-level cave mine that gets mined over basically an 18-year period. And the mineralization occurs, the top of it, 300 meters below surface or 1,000 feet. So the significance of Mainspring is that if the near surface mineralization continues in the south and we can start open pit mining there, as we advance the open pit to the north, if it connects into Park Salia, that is going to allow us to significantly reduce capital development to ultimately access Park Salia, or it could even mean that we mine Park Salia as an open pit mine. And of course, if we were able to do that, that would significantly improve the economics over and above the PFS that went out a month ago. So you're going to see the first signs of this coming out in this PEA, as we said earlier in the schedule, sometime in early July of this year. And then between Park Salia and Cactus West, we have an area known as the Gap Zone. It's about 1 kilometer in strike length. ASARCO drilled there, but the holes were only 300 feet deep because they were condemnation drilling holes, meaning that if they didn't find any near surface mineralization, they could build buildings on surface, which have now obviously been all cleared away. But we know at Park Salia, we're finding mineralization 1,000 feet below surface. So there's never really been any deep drilling in that specific area. And then on the extreme right-hand side at the northeast extension, about 15 months ago, we tried to replicate an ASARCO hole where they drilled 30, 40 meters of 3.5% copper. We couldn't find that, but we did find almost 1,000 feet of 0.42% copper continuous mineralization in the ground. And this is just slightly northeast of Cactus East, which is going to be an underground deposit in our current PFS. So this is one of the reasons why I believe in the next couple of years, this resource is going to grow to well in excess of 10 billion pounds of copper. Now, on this option to JV, we spoke about the $33 million, but really, this is just the sort of a ticket to the dance. We're not actually really dancing just yet. But if the phase 2 column test with Newton over the remainder of this year proves successful, and if Newton, through their own integrated PFS, can see a 1.4 times uplift in NPV, then they can earn in to 40% of the base case at the asset level. So what I mean by that is if our own base case PFS now is at $500 million, 1.4 times that would be $700 million. And they would have the right then to earn in for 40%. But they have to pay the Arizona Sonora shareholders for 40% of the base case value at a 0.65 times PNAV multiple. So if we take $500 million, multiply it by 0.4, it's $200 million, and 0.65 times that is $130 million US. So if we think about the capex for the project, and let's just work again for simple math with around $500 million, each party would be responsible for their pro rata share. So Rio would be funding 40% of 500 million, which is $200 million, and we'd be responsible for 60%, which is $300 million. But if you split that 50% equity, 50% debt, we'd be looking for 150 million US dollars of equity project financing. But we just received $130 million for the option payment. So the delta now is only $20 million or 30 million Canadian, which at $2 Canadian share price, which our last fundings have been done at over the last couple of years, is only another 15 million shares. So on a NAV per share basis, if the Newton technology proves successful and they exercise the option to JV, this is hugely, hugely accretive. On the debt side, Rio and/or Newton is also providing a completion guarantee and/or a performance guarantee on the technology. So when we go and approach the commercial banks and they can see that Newton or Rio's putting their money where their mouth is, and they're providing these guarantees, the likelihood of getting commercial bank debt financing is probably quite high at a good, relatively competitive, low cost of capital for a junior with no other producing assets. And we wrote into the agreement that if we can't get debt financing, then Rio or Newton has to step in and provide us with the debt project financing at reasonable commercial terms to be negotiated at that point in time.
So I noticed, so you do have a hard stop at 2, if that's the case. So I would like to leave some room for questions, but I'm just saying if you want to finish up in the next couple of minutes, then we'll go through some questions.
Anthony, we're on the last slide, which just
Okay,
basically
perfect.
is a summation of what we said before. So I think we can open up the Q&A.
Yeah, well, one of the questions, and if anyone has any questions, please type them into the Q&A or chat box, and we'll certainly make sure they're answered. I think what's so great about Arizona Sonoran compared to a lot of other companies out there is that you are based in the US. I'm seeing more and more geopolitical issues affecting miners, like even in the jurisdictions that were considered safe, like Mexico, like when you start getting into like South America, like Chile and and Argentina and those, it's clear that the US is really where you need to be. Anything that concerns you about this election or anything like that, or do you feel like you're still in a fantastic jurisdiction?
Well, I think we're in a fantastic jurisdiction, and as we touched on in the project, the fact that it's private land, and we're not dealing with any federal regulators, and we have historical water rights, access to water. It's going to be a very low carbon footprint, and we've got a very, very strong social license. I think it puts us in a very, very strong position. And look, in a lot of instances, successful business really, really does come down to timing. And in business, sometimes you need some good fortune, which, we all appreciate from time to time. I think our timing on this is going to be perfect. I think in the next couple of years with the Fed, you're really cutting interest rates. Other central banks around the world will follow suit, particularly in the westernized, the northern hemisphere. I think China is going to get into a very policy where they really support their economy. And, in the next couple of years, there's going to be exponential demand for copper, and the supply is just not going to be there. And the only way to incentivize that supply is through higher copper prices. And for those projects that are near or in production, the amount of cash that they can throw off for their shareholders is going to be, very, very significant compared to the conservative models that we obviously have to present when we do these technical reports.
Yeah, and I think it's important to understand that, whether, we have a, Democrat leadership or Republican leadership, I think the most important thing is when you're talking about metals and critical minerals, it's to work with countries that, are obviously, not Russia or China, which is really where we see,
No, exactly.
And so, the important, and I think for both administrations, whether it's going to be Trump or Biden, it's going to be very important to keep everything as close to being in-house as possible.
Anthony, it's a great point, and as we touched on, we will be producing copper cathode that requires no further refinement. So that can get sold right into the US domestic supply market for copper wire, copper tubing. At a very high level, we've spoken to executives from, the Lucid plant there. Obviously, they don't need copper cathode, but you've got a wonderful ESG story here where if we could get our copper into the copper foil for the batteries or the copper wire for their electrical motors, what a wonderful ESG story that would be made right in Casa Grande.
Yeah, absolutely. Well, I think we're going to leave it there for today. I would like to thank George and Allison for coming on today and bringing our viewers up to speed on Arizona Sonoran Copper. As you can see, a very exciting story. Certainly now is the time to take a look at the company. I think it's time to take a look at copper, and we look forward to following the progress of the company. Before we wrap it up, George, I'd like to give you an opportunity. Any parting words for our guests?
Yeah, I mean, obviously, hopefully we've perked up your interest, and all we would ask is that, put us on your radar screens, your distribution. We're happy to, provide you with a distribution of our material. We're not looking to raise money today, but certainly, at a later juncture in the year, and certainly with project financing coming next year, I think it would be good if you followed this company, because I do believe going forward, there's going to be exponential demand for copper, particularly cathode domestically produced in the US for the US market.
Absolutely. And as I mentioned earlier, you have an opportunity to own the shares alongside management as well. So really exciting story. In the meantime, you can get additional information on Arizona Sonoran Copper at the company's comprehensive website, arizonasonoran.com, including details on the company's current project, as well as latest press releases.